Hi, everybody. So I am here with Chris. He will introduce himself in a moment, but this is a new show. We call it Bitcoin Critical Pulse. It's a game of words on the idea of critical phenomena because basically the idea of this show is that it's a continuation of the work that I'm doing with the power law, where we're trying to understand the long-term trajectory of Bitcoin using the language of science and physics. In particular, this idea that Bitcoin is a network and it follows this long-term power law. But we want also to understand better the local trends, right? The short-term changes. It's Bitcoin, like many other financial instruments, it's fractal. In Bitcoin more than others, and so it has similar behavior at many different scales. And this is a very important theme. Um, so one of the tools that I looked in the past to understand this is this thing called the log periodic power law. Power law comes in the name of this tool. There are similarity and differences, and we will explore more these. But it's basically work based on a physicist called Didier Sornet. Is a French physicist, geophysicist, and he found these in physics we will call them universal patterns because they apply to many different fields. So, he started with geology, basically the idea that just before an earthquake, you see some telltale signs of what is going to happen. Mostly, the activity becomes faster and faster, right? The oscillation that you observe associated with this critical event that will be the big earthquake that we notice. But there are signs of this event happening um, ahead of time. And then it started to apply to other things, like, for example, cracks in material. We work with NASA to find cracks in fuel tanks. But the most relevant things for us, it's actually he applied to markets. And he used this approach, this signature that you can find in the data in many different markets. Of course, we are focused on Bitcoin. This is a particular angle. In fact, actually has an entire paper written on how to apply these ideas in finding Bitcoin bubbles. Actually, it's a predictive tool. You can predict ahead of time when these bubbles will happen. And but we want to integrate this approach not just to understand bubble, but to understand any particular event in the market, because a bubble is something that we pay attention because it's a big event, but there are events like this at every single level. I found Chris because I was looking for implementing this particular algorithm that is associated with the log periodic power law uh, using TradingView, because a lot of people use TradingView. Myself, I use TradingView. You get live data, etc. But TradingView has a lot of limitations in terms of the routines that you can use in all the different functions that are already built in, or even if you want to build your own functions, it has a lot of limitation in computational power. So usually when I do full-fledged log periodic power laws analysis of Bitcoin, I do it offline using Python, for example. So I was looking just to see if anybody found an indirect way, some kind of um, trade-off, to implement the ideas of a power law in a simpler way, and then being able to do it with TradingView. And I knew that I could probably there was nobody there, and I actually found Chris that he did apply at least, and he will explain it better to us. The main ideas, the main concept between, behind the log periodic power law, at least in spirit, even if not in details of the calculation. And I was really, really surprised by his description of an indicator, because when I read it, I say, "Oh, this is the most beautiful explanation that I ever read about the log periodic power law." It has both a very strong understanding of the physics, but also the economics. And I was very curious about who did that, right? And then I got in contact with Chris, and I was amazed about his background that he will tell us in a moment. So this show will focus on understanding Bitcoin in particular, but we will analyze also the entire ecosystem like MicroStrategy, IBIT, and so on. Chris is also an expert in microeconomics, so at times we will discuss microeconomic issues related to Bitcoin, but with this particular angle. Both I and Chris agree that many of the indicators that you find over there, technical analysis indicators are not good. They are kind of fake news in a sense. And so we would like to have a more scientific database understanding of this phenomenon. So I'll let Chris introduce himself. He can give us a little bit about his background.
Thanks, Giovanni. Hello, everyone. Thanks for joining today. I spent probably the last 40 years or so in the markets, inside the machine. And I started off in the markets in Australia and ended up in New York after working in most of the major financial centers around the world. I built trading desks. I ran global trading businesses. I launched hedge fund platforms. I was an early investor in some of the world's biggest names in the game. A lot of them went on to become legends in one form or another. And they're the sorts of people that you read about in the press pretty much every day, if it has anything to do with markets. So I've been around a while. I've traded most things that move. Backed a few managers, burned a few bridges on the way to understanding what actually holds up in markets, and what holds up under pressure. And one of the things that struck me and frustrated me, always had, was that there was a dearth of tools that really spent any time looking at the structure of markets. And by structure, I don't mean price. It's really what is happening underneath price and what drives price. Technical analysis doesn't really do it. It's not the right toolkit, especially for today's world. It's changed a lot since I first started. So rather than search for tools that might do the job for me, I decided to start building my own. And the first tool that I came up with was the log periodic power law critical pulse, which really focuses on identifying structure. But before I do that, before I go any further, I'm going to share my screen, and then I'll walk you through the tool and a number of components, how it works, and we'll just step through it. So just bear with me while I set this up.
And you guys, like always, we have a chat. You can ask questions to me or Chris in particular. So
because I'm still involved with a number of different businesses and have responsibilities at a board level, I need to put a disclaimer up. You can chalk that down to my time with in the business and having a respect for the SEC and FINRA. So I'm obliged to say that today's content is for educational purposes only. It's not trading advice. There's no representation of accuracy or completeness, no guarantees. Trading involves risk. Past performance is not indicative of future results, and you are solely responsible for your own decisions. So having got that out of the way, we'll move on to the good, juicy bit.
No financial advice, basically.
No, correct. Okay, so what we see here is the first iteration of the log periodic power law as I built it. And you can see that it has...
Before that, can you give a very high-level description of what the log periodic power law is and what it's trying to do?
Yeah, so I was going to get into that as I move along a little bit, but it really
okay.
What you're seeing here, and the thing you want to focus on, is the white lines in the chart, the horizontal lines. These represent the critical state, if you like, the period where the structure has changed, but price really hasn't figured out whether the structure has changed, and it's just going to keep doing its thing. without realizing that there's danger lurking. So you can see here that in the lower left-hand corner of the chart, there's this first white state that we're looking at here back in September, October of last year. And the market had been messing around for a bit, and it hit this white state here. And what that means is that whatever it was doing prior to this white state, the price is exhausted. It's had enough. It needs to consolidate, it needs to figure out what it wants to do next. And what it is going to do is a function of all of the usual supply and demand features that drive price for anything. But we don't know that. We don't know from moment to moment what is actually going to be pushing that, whether someone's coming in with a big order to buy or sell, or there's some regulatory thing that's going on or some announcement. We just don't know. So we're in this white state here, and then we come out of it. And what this tells us when we come out of this white state is that there's resolution. The state of change that existed during the white period has been resolved, and the market has decided to move forward, either in a new trend, or it's the trend that was in place prior to entering the white state is going to re-exert itself. In this case, you had a downward trend happening here. We hit this uncertainty state, and then the market comes out of it, and we have this pretty nice upward move, pretty strong coming out of this exhaustion phase that was identified by the power law method. And it continued all the way up. We had a few steps along the way where there was hesitation, but it really continued all the way up into this peak in December. And we had as soon as we hit this identification, this white period, the market immediately retreated. So we had this very strong move up, and the market was exhausted. It reached a critical state. It said, time out, I need to think about what I'm doing. And we had this sideways movement for several months. And this indecision bit in the middle here. And you can see when we come out of the white state that there's either a red or a green plot afterwards. Red obviously bearish, orange continuation of the red, green bullish, blue continuation of the red. And that gives you a clue as to what's going to happen. And these patterns that you see here repeat themselves, and I'll touch on that again in a little bit. But what I thought might be interesting is to just sort of see how this plays out as the market evolves. And I've highlighted the turning points with with vertical green and red lines to show you where the market sort of reached a little bit of instability, a white state emerges, there's uncertainty, market pauses, it continues, retraces, white state, and continues. And what you're seeing here is structure. It's an approach that doesn't try to pick tops or bottoms. It tracks when structure breaks down, when the trend's out of fuel and the next move is about to happen. And that lets you get prepared. So there's a broader architecture behind all of this. We'll get to that later. And yes, it's built for any market that fractures under pressure, but we're really focusing.
Chris, I'm noticed, sorry to interrupt. I noticed something, right? These red and green lines appear ahead of time. Is this like a prediction from the algorithm?
No, this is just illustrative at the moment, just so to sort of draw your eye to where the change is happening on the graph, and I'll come back to that momentarily.
Okay.
It's built for Bitcoin, really. So when Bitcoin breaks, it doesn't break. It detonates. It's much more volatile than other instruments. So we're going to take a look at what happens when price stops telling the truth and structure starts speaking instead. So what you're seeing really is structure on a timeline. And that gives you all sorts of clues about how to trade the market. And what's really important here is there's this scale invariance. So when you look at this page, and we have 1 minute chart, 30-minute chart, 1 hour, 2 hours, 4 hours, 6 hours, 8 hours, 1 day. And in all of them, the same patterns repeat. It doesn't matter what time scale you're on, whether it's a high or a low time frame. You've got the same repeating patterns with this log periodic power law across all time frames. And that's really powerful and really important. So we're seeing signal and we're seeing warnings. And this was the first iteration. And I thought after building this, it was interesting and it was very helpful. But, oh, someone's saying reload the page. Giovanni, can you see the screen okay? Hello?
Yeah, the screen looks perfect.
Okay, I just got a message popped up on my...
No, it looks good.
Okay, let me keep going. So we had this one line and it was very helpful, but I thought it would be more interesting if we could overlay a faster reacting, a second LPPL. So I developed one that was a little more responsive because, you know, the game here is not just to understand structural change in the marketplace, but to try and, you know, we want to trade it, we want to make some money out of it. So how do we do that? Having this slow acting LPPL is very powerful in and of itself. But if we were able to detect moves more on a more timely fashion, then that would be even better. So this second pulse LPPL has been overlaid. And you can see that the original LPPL line reacts and shows you that we're in an exhaustion phase, a structural reset phase. But this second pulse line responds more quickly, and you can actually use it to trade more aggressively if that's something that you want to do. But now that we've got two periodic power law lines, there's a lot of information we can extract from this. And we can look at when these two lines are in sync, when there's confluence, when there's other information we can take from the underlying data to identify the strength of a directional move. And instead of just having these lines that I drew manually in here to highlight things, we have the ability to plot the background underlying strength of the marketplace as an additional visual cue for anyone who wants that. It can be turned on or off. You know, charts can get cluttered, but it's a visual aid to show you when the market's in a particular state and just to highlight it. So when we started back in this September-October period, you know, I had green lines here, but now we actually have the data that comes from the underlying power law displayed as a background confirming the strength of the market at a point in time. The black means that there's no particular indicator that we can extract from the data, but you can still see through here the trend in this period is clearly up with both power law lines showing that. We have consolidation here with one, but not the other. It's still strongly positive. So the potential to get faked out by a slowdown or a pullback in the market when you've got this additional information diminishes. But we're still not focusing on, you know, what the next candle is doing. We don't care. What we care about is state change, and that's signaled by the white lines that come from the power law line, and reinforced by the confluence of the two lines together. Here, the slower moving power law indicated a period of consolidation and exhaustion, but the faster moving power law said, no, this is actually a bit bearish. We're going to trek down for a little bit. I'm not concerned that we're in another consolidation period or an exhaustion period, and it's giving individual signals: red down, green up. Purple is period doubling, meaning intense price activity. And then we coalesce again at this point where both power law lines are generating white state before completely failing and moving into a bear state until we get to the bottom that occurred in March. more consolidation, two power laws speaking, and then resolving at this point here in early April before the faster power law took off. And then this was subsequently confirmed by the second power law. And these green backgrounds allow you to see the sort of underlying strength of the move that was happening. And then most recently, we have another early warning from the fast power law and a confirmation from the slower power law line saying that the market's in a period where it needs to take a bit of a breather. Now, none of us knew that the things that were going to unfold in the Middle East last night were going to happen, and it may just be coincidence, but I can tell you from my experience with markets and indicators like this that often the structure in the market tells us something, because there are people with knowledge who use it in markets in different ways, and that causes the structure, the underlying structure supporting a market's move at a point in time to change. Now, I don't know whether that's price, I don't know whether that's fundamental economics or drivers of supply and demand at a point in time, but there's this eerie coincidence that happens again and again where scientific indicators like this suggest a change is about to happen, and lo and behold, we have an exogenous event in the world that causes price activity to move.
And if you don't mind, Chris, I want to make a comment about these. Many times people are confused about this external event that creates a price change, or it's just a coincidence, and people try to find an excuse to describe what happens. But this is why it's important to understand things scientifically, because the scientific understanding of this is there are market conditions that are independent, that are inside, how the asset is working. Maybe there are some influence from outside, but it's basically kind of conditions, right? We are looking for market conditions, and the white line here is what is linked to this log periodic analysis of the data. And I make many times when I talk about these an analogy that maybe people can understand. If I go on top of a mountain where is a bunch of fresh snow, the conditions are ready for an avalanche, right? The avalanche probably will happen by itself. All what it takes is just a small change in pressure or whatever. But if I go there and I clap my hand, then people will look at this and say, hey, Giovanni created the avalanche, right? I just added a little bit of energy. I push a little bit. The conditions were ready and the avalanche happened. But I am not really the cause. I just maybe accelerated, or, I was the
catalyst.
The catalyst, the last straw, they broke the camel's back. And it would be a mistake to say that I was the cause, right? And so same thing with this. This is a perfect example because it's very educational, very important to understand. There are, because you notice many times there are certain things that happen outside that are earth shaking, and the market barely moves at all. Well, because the conditions were not there. If I go there during the summer when there is no snow, I can clap how much I want. There will be not an avalanche, right? The conditions are not ready for that. So this is a very important way of thinking about the market. I think very few people have. So I'm very glad that you're making this point, Chris.
Sure. And I see there's a question from Kev Allen about oscillations and earthquakes. And this sort of ties into the point that you're making, Giovanni. With earthquakes, it's not oscillations so much as energy and buildup of pressure in tectonic plates. And it's the same phenomena that causes avalanches, the grains of sand collapsing under their own weight when you add one grain too many and the whole pile collapses and reforms. With earthquakes, it's the pressure in the tectonic plates building up until that pressure has to be released somehow, and something triggers it, and you have the earthquake. So all of these phenomena that are found in nature are also exhibited in price structures. And what we're looking at is not so much the price, but the structure and the information that we can extract that lies underneath that, on which price performs. So it's really about understanding when the market is approaching or in a change state, and then what the condition is as it exits from that state. And that's all we really care about, because if it's not in a consolidation period, it's moving in a direction until it enters another consolidation and state change period. And that's what this tool is designed to identify. And there's a lot of information that we can extract from these components. And this tool allows us to examine that in different ways. So here's another way of looking at it. What we have here is a series of red and green dots that tell us whether there's strength in the move. And in these two very clear cases here, the most recent upward move, you see that there's not a red dot in sight. There's nothing, even during these sideways periods, that tells us that the market is vulnerable to a downside move. Both power law lines are very strongly upward. We have periodic instances of period doubling in price activity, so faster, more agitated price activity, all the way up until we hit this the white state again. And what happens? The dots start to disappear. Over here on the left, where we had this collapse in price, the same thing. There's not a green dot in sight here, not a one. So this information we can extract on the structure of the market, and we can use that to inform our trading view at a point in time. And there's other tools that we have. I must have deleted one. Okay, so here we have confluence tools. So this tells us the red triangles when the downward pressure, the downward signals from the power law lines are confluent. The green, the opposite, a more bullish signal. And the orange crosses tell us when the two signals are in disagreement. So we have a lot of information that we're building up, that we're extracting from the log periodic power law lines that we've constructed based on the data that we're feeding into them about price. And that's really powerful in lots of different ways. So if you're someone who's interested in trading the market, there's a slew of information here that you won't get from any technical analysis. It's not lag, it's structure. And it informs your view across any time horizon. So you apply this chart, these metrics to any time frame, and you get the same patterns.
So,
and you can use that to inform your trading.
Chris, we're talking about trading, right? Because in the Bitcoin community, this is a very delicate topic, right? Because some people want to hodl. You're probably familiar with this, especially. By the way, Chris was on the fence with Bitcoin. I kind of orange-pilled him a little bit, but he orange-pilled himself by looking at Bitcoin more closely. He's I have more experience in the Bitcoin world than he does, and I know a lot of people criticize the idea of trading, right? Like, for example, sailors say that you have to be low IQ to trade Bitcoin if you want to trade Bitcoin. I don't agree, because I think it's important to use the volatility of Bitcoin. You can still believe a long-term hypothesis or idea of Bitcoin following the power law, but then you can use also these dynamic changes. And there are many tools. You don't have to trade necessarily your Bitcoin. You don't have to sell them, but you can use a lot of these derivative tools that are being developed around Bitcoin, like, for example, options, or futures, etc. So can you give us, and we will go, we will do this every week on the same time on Fridays, 3 p.m. PST. So, we will explore all these topics, but can you give us maybe an idea of how we could use some of these tools together with derivatives, maybe an option, like if you want to use a covered call or other strategies, so people don't have necessarily to sell their Bitcoin?
Sure. So you raised an interesting point everyone has a different view as to how they want to trade something. They have a different mandate, a different objective. So if you're a long-term holder and you're watching the market pull back and maybe you're, dollar cost averaging, that's fine. But at some point you may question you should be doing that. And, you start to lose faith a little bit. This is a tool that tells you the reality. It tells you what the structure of the market is at a point in time, and that can steal your resolve. It may encourage you to enter the market more aggressively or less aggressively at a given point in time. If you're someone who's interested in generating a dividend or income from your Bitcoin holdings, then there's very clear signals here that you can use to take advantage of that. In each of these instances where we have a white state occur and the market is in a consolidation period, if you look at this period here ran from mid-December in 24 through to the end of January, early February in 25. So 2 months. So there's 2 months of sideways movement that happened here. And if you were someone who wanted to generate income on your Bitcoin, you could sell calls or sell covered calls with a pretty solid degree of comfort that price wasn't going to breach these levels and be sustained through it. And if there was some uncertainty around these areas here, all of the signals that I've just described to you, including, here they all are together so we can have a look and see, all of them together through this period, when price punched through the white state horizontal line in January around the 21st, there's not a single signal that tells us that we're in a confirmed rally. So you could be someone who wants to, who sells call spreads, covered calls through this period and bank that income. So, and similarly, you could do put spreads when the market hits a bottom. There's an array of strategies that can be developed from this, and it's really a function of your imagination and how you want to use it for your particular degree of comfort in the market at a point in time. So the real message here is that, and the real advantage is that structure doesn't lie, and it doesn't change just because your candle size does, or because your RSI or MACD does something wacky. It's totally independent. And
but what do you think about these traditional indicators like RSI, for example?
So most of the technical analysis tools were developed at a time, before Bitcoin existed, and most of them were developed for use in equity markets, which are meant to react rationally and stably. But we know that explanations of market, be it the random walk or the efficient market hypothesis, fail constantly. And they're elegant forms of academic work to describe market conditions at a point in time, but they fail under stress. What doesn't change under stress is the structure. And we have a doorway to it with tools like this. It shows you what the structure is, and then price reacts as a function of the structure. So an RSI or a MACD or a moving average or any of the myriad of tools that are out there that fall under the category of technical analysis are interesting. I think they're pretty much all archaic at this point in time. I think time has passed them by, but so many people use them that they're representative of behavioral activity. And perhaps that's why price gets so confused during these consolidation periods that we've identified as white states. But I don't trade them. I don't use them. I did when I first started out in markets years ago because that's all there was. And everyone knows them. They're broadly distributed. But their flaws are pretty well known. And compared to the scientific tools that can be applied to markets today with access via platforms like TradingView, why would you use them?
Yeah, exactly. Do you want to address this question?
How does it fit? Which
Oh, yeah.
one?
The one on the screen, it says, this is from Brian. It says, I may have missed these, but these tools are valid for Bitcoin only.
Oh no, you can apply this to all instruments. But we've built this the first suite of tools we're building specifically for Bitcoin and related instruments. And the reason for that is that some of the volatility characteristics of Bitcoin are pretty unique and dissimilar from other financial instruments. So some of the inputs that go into the construction of the power law lines are different. So the answer to the question is yes, it applies to all instruments, but the inputs for them are different.
Yeah, exactly. And what about this question? It says, how does this fit in Wyckoff?
Wyckoff. Okay. So I haven't done that analysis. Wyckoff is an interesting take. I mean, there are any number of these things that you can use. But what I would say, so I mean, you could apply this as an overlay to a Wyckoff methodology or to Ben Graham or any of the others that you care to use from a sort of fundamental or a pseudo-technical analytical perspective.
I actually looked into it, Chris.
Yeah.
And I will call Wyckoff the poor man log periodic power law, because actually, in a sense, they are related. But and I noticed that with so many other things that these older tools approximate some patterns that people saw because they had a very good intuition, they are very good kind of physical sense of the market, but they didn't have a mathematical and physical understanding of what was going on. So they came up with an approximation. So actually, I did study Wyckoff in relation to the log periodic power law, and it's just an approximation. So what we are doing, it's an advanced version of Wyckoff, or actually Wyckoff is a poor man version of a power law, of a log periodic power law.
Yeah, you're right. There's a lot of different tools and approaches that are out there and are readily available, and I encourage people to get educated on them all, because they all have value in some way or another. It's just a question of when are they going to break. And the point about this tool is it's not always right, but I mean, in the example that we've looked at, that we're observing here, and let me just go back to a cleaner shot so that it's easier to see. So let's go. Actually, let's do this. Let's go here. Let's look at Giovanni's power law tool, and let's go all the way back in time.
Do you want to use maybe a log on the y-axis?
Yeah, let me just figure out how. There we go.
Yeah, that one.
There we go. Okay. So let me just squish this down a little.
Actually, I like the log periodic power law in the log version. It looks good, really good.
So what do we see here? Well, we see a lot of repeating patterns, so self-similarity across time. And we see instances where the white state exists. So the structure is identified as being an exhaustion, a state of change. It's got to come out, it's got to resolve one way or the other. And we see lots of bottoms where there's very rarely any sort of a move that holds up below the white state or above the white state in the case of markets that have been rallying. And if we zoom in on one, so I'm not sure what's going to happen here, but we'll have a look.
It's really amazing, right? So this is something that I already observed before. What I say is that Bitcoin, to be an overall power law, needs to do a lot of power law stuff. So really, these are times where we see the white line. It's basically Bitcoin being a power law. And you can see how very critical times, right? For example, that bottom that was associated. And the gray line represents what we call the support power law line, right? That we think is associated with the cost of production of Bitcoin. And the white line of the log periodic power law perfectly merges or agrees with the general power law. So it's almost like we're looking at a mini structure inside the power law, because this is one of a thing many times people say, oh, the power law doesn't help us to tell us what the price is doing moment by moment. But if you're combining with this tool, then it's amazing. We really work together in a fantastic way.
Yeah.
Sorry, Chris. Go ahead.
That's okay. So I'm not sure what's going to happen here. I haven't done this, so we'll find out. So here are a couple of instances where price dipped down below the log periodic power law critical pulse white state, but it wasn't sustained. So the question is there anything in the toolkit that we've got that would tell us that this was a false move? So let's see.
Wow.
So there's our confluence indicators, and I'm going to do our confirmation indicators.
Amazing. You have so many tools.
There's nothing that tells us once we hit the white state, there's no red dots anywhere here. So we did have it here, the bar before we hit the white state, but nothing. And these, nothing. We get green, we get red, so a little bit of conflict still. We get an early resolution here. The faster reacting power law critical pulse line is moving out. We're getting more green dots. We're getting a proliferation of green over red dots through this sort of smaller move here. And same thing here. There's nothing that tells us that this is sustained under this white state.
Right.
So yeah, it's telling us that the structure's changed, it's resolving, and then when it reaches resolution, you have a new direction, either up or down. Mm-hmm. So this is an important thing. And in the white paper that you can get off our website, I talk about this a little bit. And these snapshots that you see here are taken from that. But the point that I want to make is that during this rally, from October through to December, January, there's not a red dot, there's not a red confluence signal, there's not a red indicator anywhere to be seen until we get to this exhaustion phase. And then when we get to resolution, which really happens here after the white state, we've still got this sort of horizontal move happening with the power law. It hasn't turned down despite price having turned down. And you'll see that we've got on and off green and red state conditions here. But then once we turn at this point, we've got this background color showing us that the move is now bearish. And all the way down here until the next white state, everything's red. The confluence, the strength of the move, everything. We get to the white state, nothing triggers. We get a little bit of movement here, consolidation, and then we move to this next bullish phase. Everything's green. Where did all the red go? There's nothing. Structure is bullish.
I never saw anything so clean and even predictive, right? Because you can understand once there is a white that something is going to happen, so you can get ready, and then you have all these confirmation signals. It's amazing. Yeah, it's very impressive.
Yeah, and then it's I must have clicked next.
Let's focus on yeah, go ahead. Sorry, I wanted to ask you today what is happening today.
Sure. So this is a shorter time frame. Same thing. So as you go down in time frame, go to lower time frames, you do get more noise. It's absolutely the case. That happens with any tool, but the point is that condition of signals that really confirm a trend one way or the other, even these micro little trends in here that go for a few hours, are all green or all red. Sometimes you get a bit of confusion, but you also have these other guides, like there's no state in the background here. It's red here. So it's telling us, okay, even though we've got red and green going on, the trend is down. The power law lines are still pointing down. They're not turning up. So we've got this self-similarity across time frame happening, which is really cool. and then you get to the 1 minute time frame, and you can see the same patterns. They're shorter,
Nice.
there's more noise, you expect that, but when they happen, it's the same
Confluence.
thing again and again.
Yeah.
So
And
that's
this
the
how you
tool.
know that you are dealing with something real, that is not because when you see this kind of confluence, that is a way to know that there is a real signal in the data.
Yeah, yeah. So that's the tool. If you're interested in the tool, if you go to our website, Complexity Trading AI, and click here on the page, it'll take you to a registration page, which will allow you to do two things: to sign up if you're interested in using the tool, and you can also download the white paper that talks about the log periodic power law critical pulse tool and what it does and how it works, and that's it.
Yeah, and we will have a newsletter. So by signing for the, expressing your interest, it's a free newsletter. We will write this newsletter where we are going to analyze the market, introduce some of the topic. It will have an educational component where we are going to give you the basis if you want to understand better this approach of a log periodic power law, resources, books you can read about this criticality, for example, the idea of criticality, and there will be an actionable part where maybe we discuss some. It's not financial advice, but we can kind of give some educational examples on how to apply these tools to actually actionable things that you can do. The goal is the same. If you're a long-term holder, you want to have a more Bitcoin. And going back to that, this can also be used, right? If let's say you want only to do DCA, that is what many long-term holders do. This can help you with that because it's much better to do DCA at a local than minimum, right? Than doing it when there is a top. Some people say, the sailors sometimes say these kind of crazy things, but he can afford it, right? He say, "Oh, I'm going to buy all the tops." Okay, you can do that. We are going to buy all the bottoms. Let's see who does it better. So it's a tool that can also be used for that. There are many different applications.
Yeah. So I think the takeaway message is that most of the tools that you'll find follow price. They tend to lag and just follow price. This one doesn't. It tracks the limits of trend sustainability, and it shows where you are when that structure breaks. And that's where an edge is.
Mm-hmm. Exactly. Anyway, I think this was a very good introduction to these ideas. We will be back every Friday at the same time, and in the future we will have some more tools for you, but also some examples on how to use them, etc. And um, so this will be a weekly commentary on the market. In fact, give us, Chris, maybe your understanding of what is going on right now. Maybe we can conclude with that if we had to look at the current situation, where we are with the price and so on. What is likely
Sure.
to happen next, or what
Well,
the chart is telling us.
this is the daily chart that we're
Yeah,
looking at right now, and we've been in this period of uncertainty since May was
yeah.
the early warning. But what do we see here? We see white state for the more state for both power laws. They're both in a white state right here. The fast one is just starting to dip out of it and turn
Mm-hmm.
down. You can see it poking its head out just here. We had a confluent. So let me just explain. So this white state here for the power law line, the more stable one, has a little bit of variance in it. And this signal's firing because it's detecting that the fast-acting power law has turned down, but there's sufficient variance in the white state here of the more stable one to allow this signal to fire. So it's suggesting that we've got, maybe some downside happening. So this was yesterday, the 12th, yeah. And this is today, the 13th. So there's no new signal. We have no resolution. So we're still uncertain, unresolved, and we haven't emerged from the white state. Now, there's a couple of things that I'll just point out that are interesting with this tool. And that is, when you see price cross through a power law line like this here, that tends to tell you that the next move of the power law lines is going to be some sort of consolidation, some sort of leveling out. It might not be straight into a white state, a consolidation state. It may be into sort of just more generalized, this type of movement that you see over here. But that passes through these lines, you tend to get a white state happening in the not too distant future. So we saw that happen very quickly here with the fast moving power law critical pulse line, and we saw it happen a week or so after, even though we've got bullish tones in the marketplace that ran out in this little phase right here before topping out at the white state line.
Yeah.
So right now at this scale, we're waiting for resolution. If we go to shorter time frame, let's go to 8 hours. We can see that the power law lines have broken down and we've moved into a bearish state. Mm-hmm. We haven't completely broken down, but you can see here we've got a proliferation of dots and triangles and red background. So market is tending to get, it's looking weaker. If we go into lower time frames, same thing, except we've got a bit of conflict. So the two lines are at odds with each other right now at this very moment in that time frame. Mm-hmm. 4 hours, same thing. 2 hours, same, although a different pattern. So a stronger downward move in the shorter time frame.
Yeah.
Shorter 1 hour, we've got things starting to turn up. So this is where the conflict is coming. You've got different time frames that are showing different signals that are suggesting we haven't resolved. If we go really micro, right. Let's go down to 1 minute, see what that looks like.
So again, if it was a confirmation signal, we will see similarity at all the different scales. The fact that we don't,
correct,
things are still unstable. So this, for example, we know a big good time to do DCA, right? If you got paid and you say, oh, okay, I'm going to buy some Bitcoin, wait until we have reached kind of a local bottom, you will get a better entry.
Yeah. So, this is really micro. We're down at 1 minute here. You can still trade this if that's what you're into. But we've got, hesitancy here. We've got conflicting signals all the way through here. There's not this is not something that I'd want to be trading at the moment just because it's too uncertain in this time frame. A little bit longer, 5 minutes. That's a bit easier. Clearer groupings, clearer signals, but running out of steam here. 30 minutes. Same. It's a little stronger. So we've had a bottoming. This is a better signal to trade. So we've had the faster power law line turning up at 3 o'clock. It's had a battle with the shorts all through here, so different strength of signal all through the background. But now we've got this dominance of green signals occurring. So, perhaps we're going to see in the next couple periods this slower acting line start to move up. If it did, that would confirm that this time frame is remaining bullish, and you'd start to look for confluence across other time frames. So there's application across time horizons, but right now on the daily, I'd be waiting for resolution.
Yeah. Yes, and how when is asking this question, I don't know if you see it. Do you see the question? So it's like each level needs to be fractal in scale of each other before the indicator is considered valid.
Yeah, although you get into the lower time frames and you do have a lot of noise to contend with that can confuse the signals. But it's the overall structure. So the powerful structure is at the daily level. But if you see the shorter time scales stacking up one after the other at odds with the daily, then you've got to be looking for breaks in the patterns that you're seeing in the daily to coincide with the fractal nature of the lower time frames. So yeah, there's an element of fractality in this, and in fact, one of the other tools that we have that we've built and will be deploying shortly really focuses on the fractal and self-similar nature of the patterns to generate signals. So there's a suite of tools. There's about 10 or 11 of them that I've developed that are on the website that we'll be rolling out. The first is this power law. It's kind of the foundation piece because it really talks to the structure of markets. The other components use various scientific methods to focus on measuring self-similarity, different sides of structure, and what that might mean for a move. But we'll be rolling all of these out over the next month or so.
Fantastic. So we have one more question. So since this is a LP algo, where TC critical time?
Yeah. So Giovanni mentioned that Pine has its limitations, and the truth is you can't run in Pine. It doesn't have the facility like Python you do in Python to run the full log periodic power law with critical time. So the toolkit includes most of the functional implementation that's possible in TradingView. We've optimized the behavior as much as possible to preserve compression, critical point dynamics, oscillatory behavior. But time critical is kind of fixed in one of the power law lines that we're plotting, and we have another one that we're releasing, which is adaptive and gets much closer to the method. So I hope that's answers the question about the TC critical time.
Right, and let me explain, and maybe in the next episode we can go a little bit deeper in the educational aspect, kind of give a general introduction of log periodic power law. One of the advantages of a full calculation is that it's supposed to calculate the time in advance, sometimes days, or it depends on the scale you're using, but it still is telling you what is the likely possible event, right? If it is a move up or a drastic move up, so a bubble or a crash. It's almost impossible to do this with the Pine script because it's already amazing when Chris develop all these related ideas or subset of idea as close as possible. This is why he calls it a pulse, right? So there is this area. Is it correct to think that this white area is indicating that we are in this region where we are going to have soon a critical event, right?
And exactly.
Interpretation.
Exactly. So we've had a move. We've reached exhaustion or a critical state, and this is sort of the analogy of the avalanche. So we're in this period. I sometimes call it consolidation. That's not necessarily accurate, but it's a period where we don't know we know something critical is going to happen, and it's either resolution of price continuing the move that it was making prior to entering that state, or reversing and falling away from that state. And you see that in the chart, on multiple occasions. You see it here, where we have resolution of continuation all the way up from October through to December, and you see it again here where we had the collapse, but no sort of secondary white state until the very bottom. So the resolution was pretty clear, and then again a break out of the white state. So a critical moment where price reasserts itself and moves back up. So yeah, that's exactly right. I see there's a question from C SpaceX asking about.
Yeah, maybe we want to do this first. Will be their yearly subscription option rather than monthly. We're not working. We don't have yet the full launch of a product for now. Sign up for the newsletter because anyway that is free for everybody, and then because of course it's a lot of work from Chris and I. We will have some kind of subscription, but we will announce it at the right time, and there will be different options. Sure, you can subscribe yearly or monthly, whatever you like. Okay, and then this question: is there less false positive using the compare to price-based traditional indicators?
Yeah, absolutely. I mean, you can see it.
Yeah. It's really amazingly precise if you start to put all these things together, right? The convergence of all these indicators, and the entire idea is that the majority of traditional indicators are lagging. So there was a time where I was looking for anybody that had any scientific understanding of a market, and one person that I discovered and that was excited, and maybe you know him, Chris, John Heller. Do you know him? He's actually an engineer that developed a lot of indicators based on a more scientific understanding of data. Right? He actually has more of a signal analysis approach. And I thought, okay, this guy will be it, right? And then I started to study his indicators, and they were lagging, like all of it. Yeah, he had a framework that was correct, with the idea of signal and noise, how to reduce noise versus signal, but he couldn't get out of these limitations of using this traditional approach. If you use any moving averages, because in the end it's mostly that, right? RSI, etc. They all based on some kind of moving average. You will always fall on this idea that a moving average creates a delay. These tools are more predictive because they indicate, they kind of test, like Chris was trying to explain, the state of a market, right? What are the conditions? Is the market in a situation where there is stability? Is the market ready for a change because everything is indicating that there's some kind of instability? It's much, much more powerful. A completely different way of understanding the market.
Yeah, it is. It's a totally different way of thinking about markets. And, I think that there's only one thing that matters, and that is, is there state change? The white is a state change. Yeah. And then when price resolves out of that, then that's where it's going. It's going in that direction until there's another state change.
Yep. Anyway, guys, we're trying to keep this within 1 hour to make it digestible. We will be back next week. Please visit our website, sign up for the newsletter, and we will let you know when these tools are available so you actually can use them. Okay. Do you want to make any final comment, Chris?
Yeah, I'd just remind everyone that the website is complexitytrading.ai, and on the page there you'll see the suite of tools that we're building. It tells you a little bit about what they are just in the on the icon for each one. But they're all tools that are based in science and scientific methods of physics and other disciplines. applied to markets very specifically, and in combination, they are all designed to mix and match with the log periodic power law to try and give you insight as to the structure that's evolving in the market at a point in time, and how price is likely to resolve as it comes out of that structure. And all of them are designed to function without repainting, so they're not lagged, and they can also function independently. So thank you for your time today, and look forward to the next time, and we'll get a little bit deeper into some of the nuances of this tool and how to use it. If there's something specifically that you want to have addressed, let us know, and we'll include that in the program.
Thank you so much, Chris. Thank you, everybody. Bye, guys.